Well, everyone looks like they're looking at me. Okay, let's have a look at exercise 8.6. On the 1st of January 2015, okay, so I'm going to highlight my dates because that's the important thing that I do with these sorts of questions. Wall Limited purchased equipment for a total of $55,000. The estimated useful life of the equipment was 8 years, with an estimated residual value of $5,000. The entity's reporting period is on the 30th of June, and it uses straight line depreciation. On the 1st of July 2017, Wall Limited revalued the equipment upwards to reflect the fair value of $70,000. The revised useful life was 7 years, with a residual value that was estimated to be nil. On the 1st of January 2019, Wall sold the equipment for $56,500. Now it's asking me to prepare the journal entries in relation to the equipment from the date of acquisition to the date of disposal, assuming no GST. Okay, so we'll only do A, we won't worry about doing B because it's just the same thing with GST included. So we just don't need to confuse the matter just for the moment. So my journal entries, let me see, I'll just start down this way. Okay. So I'm going to have a date, and I'm just going to make a journal, an account, and my debit column and my credit column. Now it says they purchased the machinery on the 1st of January 2015 for amount of, so what are we purchasing? We're purchasing equipment, and it's for $55,000. Now I'm just going to put that to cash because that's where it's going to eventually come out of, $55,000. So that's the first entry that I need to do. Now we're going to have to do, we dispose of we revalue the equipment on the 1st of July 2017. So we're going to do depreciation for those periods. So I'm just going to do a quick calculation of my depreciation. So my depreciation is straight line. And straight line is my cost minus my residual divided by my life. And the cost was $55,000. My residual was 8 years was my useful life. Residual was $5,000 divided by 8 years. That gives me 50,000 divided by 8. I'll do it all the way. Divided by 8. Hit the wrong button. Let's start again. 55 minus 5 equals, divided by 8 equals 6,250 per annum. So 6,250 per annum. But we're doing our we'll do our 2015. It's from January to, where is it, June? So we've got 6/12 times 6,250 equals 3,125. We've got 2016, which is 6,250, and 2017, which is 6,250 as well, because that then brings us up to the 1st of July when they decide to revalue their equipment. So that gives me plus 6250 plus 3125. So my depreciation in total comes to 15,625. So 15,625. Okay, so now I'm going to put that depreciation back in there. So the date I'm doing this depreciation, I'll do this for the 30th of the 6th, 2017, and it's depreciation expense. So I'll just box that so you know that that's all a calculation, and my journal page continues. The debit for my depreciation is 15,625 and it's accumulated depreciation. Of 15,625. So that brings me down to the 1st of July 2017, where we're going to revalue the equipment upwards to reflect its fair value of 70,000. So the first thing I need to do, that's the end of that journal. So on the 1st of the 7th, 17, I'm now going to zero the value down. So I'm going to take the book value down to its carrying amount. So I've got 55,000 minus 15,625. And that gives me 39,375. So that's my book value. So my cost, and let's do it over here, cost is 55. My accumulated depreciation is 15,625, which gives me that figure that we just calculated of 39375. Now what I'm going to do is I'm now going to reverse my accumulated depreciation to my expense, to my equipment cost. So accumulated depreciation is a debit this time of 15,625, and my equipment is now going to have a credit of 15,625. So that brings it all back into line. So that's there. Now I'm going to prepare the revaluation. So my revaluation, which is also happening on the 1st of the 7th, 17, I'm going from now 39,375 up to what was considered the fair value of $70,000. So let's just do a quick 70 equals, make that a positive. So I'm revaluing by $30,625. So I have now what's called equipment, which is going up by 30,625, and I have what's called a revaluation surplus, which is an equity account of 30,625. So that brings me back down to the last bit, which is now I'm going to have to calculate the depreciation to the 1st of January 2019, where I sell the equipment for 56,500. So we're going from the 1st of July 2017. Now my new calculation of my equipment, because now we're still doing cost minus residual divided by life, and we revalued to 70,000. Well, you can't see that, there it is, 70,000, and it has a 7-year useful life with a nil residual value. So we've got 70,000 minus 0 divided by 7 equals $10,000 per annum. And when do I do it? I sell it on the 1st of January 2000. So I go from here to 18 would be, I've got 1.5 years worth of depreciation. So my depreciation expense and this would be on the 31st of the 12th, 18, the day before I sell it. Depreciation expense of 15,000 and accumulated depreciation of 15,000. So now my book value of my asset that I'm carrying is, so we had 70,000, so my cost was 70, or revalued was 70,000, and my depreciation or accumulated depreciation is 15,000. So the value in my accounts is 55,000. Now it's important that I calculate that because in the question it says that we sold the equipment for 56,500. So that's going to give me an indication of whether I make a loss or a gain on the sale of my asset. So let's do the calculation now. So my last depreciation, my last entry is on the 1st of the 1st, 2019. And I received some cash of 56,500, and that was the amount that I just circled. I am now going to reverse out the accumulated depreciation, which is, we worked out it was 15,000, and I'm taking it from here. So my equipment is now going to come down to nil, so I'm going to credit that for 70,000. Now I have 56,500 plus 15,000 gives me 71,500. So I've got 70,000 on the other side, so it means that I make a gain on the sale of 1,500, because gains are credits and losses are debits. Alright, so that's my calculations. Now I might just zoom out just a fraction so you can get all that on the one page. So that's our question there. And a big shout out to Jack, who's lent me his calculator. What a beautiful calculator it is. He asked for an autographed copy, so I autographed it for him. There you go.